5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. China hits Nvidia. Beijing rules that the chip giant violated anti-monopoly laws after a preliminary probe. That's as US-China talks extend into day 2 in Madrid. Trade, TikTok and defense on the agenda. And investors gearing up for a big week of rate decisions with the Fed, the BOE and the BOJ on deck. And indeed, it did appear that we were risk on with futures on the S&P and Russell 2000 pointing higher. We were actually higher until just a few moments ago for Nasdaq 100 futures as well. It would have been a 9th day of gains. We'll see how the day pans out. But those China headlines on Nvidia just dropped a few minutes ago, and that sent the stock lower in pre-market trading, and that has futures pointed lower as well. Interesting week, of course. We're almost likely to get a 25 basis point cut. There's very little chance that we won't, but it's what happens after that that matters. Goldman Sachs out today saying that the Fed chair might nod softly to an October cut, but there are some questions still to be answered. We're pretty much where we were at the end of last week, obviously, in yield land with the 2-year at 355, the 30-year there still below 470. So let's get to some individual stocks to watch now. Here's Valerie Titel in London. Valerie.
Good morning, Vonnie. All of my stocks focus on regulatory scrutiny of late. The first one I want to start with is Hims and Hers, down nearly 2.6% so far in pre-market trade. This comes after the FDA chief essentially used their Super Bowl ad as an example of why they need to crack down on misleading ads in the pharma space, essentially arguing that the Super Bowl ad promoted a weight loss drug without giving good examples of its side effects and of its drawbacks. This is as the FDA amps up its pressure on analyzing these pharma ads and adding scrutiny to the industry. Let's move over to the tech space. Regulatory scrutiny here, but this time coming from China. China launched not one, but 2 probes over the weekend into the tech space. One of them had to deal with the fact of American-made IC analog chips, anti-dumping measures released around those, and that is affecting Texas Instruments and Analog Devices. Both of these stocks down just over 2% in the pre-market trade. And the news from China doesn't end there. They also said that Nvidia has violated antitrust law when it comes to a recent acquisition they've made. And this comes at a curious time, Vonnie. We know that the Scott Bessent and his Chinese counterpart are currently in Madrid talking trade, talking about these tech issues. It does seem like China has really amped up the pressure in the last few days. Nvidia down over 2% on the back of this news. Bonnie?
Valerie, thank you so much. And let's stay on Nvidia now. Bloomberg Tech Europe anchor Tom McKenzie joins me for more. So, Tom, tell us what this China ruling actually is and what it means for Nvidia.
Yeah, so this is an anti-monopoly or antitrust ruling from one branch of China's regulatory policy makers, regulatory apparatus. And it's significant, of course, in terms of the timing, because both Chinese and US negotiators are meeting in Madrid for a second day of talks today. So the timing is pretty intriguing from the Chinese side on this. What it really does, of course, is ramp up scrutiny on Nvidia and its operations in the Chinese market. And of course, it's faced a number of challenges from both sides, the US and China. It's a reminder of just how difficult it is for a company like Nvidia to navigate the geopolitics, particularly when it comes to questions about national security around semiconductors. The specific decision today relates to a Nvidia takeover of a company called Mellanox, which is in the networking part of the business. And the finding from China's regulators is that Nvidia, according to this preliminary finding, has discriminated against Chinese companies. As a result of that, we understand Nvidia could face fines or potentially restrictions on its business operations in China. We haven't had that clarified yet from the Chinese side. We're waiting to see what specifically this means for their operations. But clearly, this is an additional hurdle for a company that, of course, is contending with licensing changes around its chip exports into that crucial market. And the Trump administration has made some of those changes, including specifically around the H20 AI accelerator that Nvidia, at least on paper, can supply into the Chinese market if they give 15% of sales and revenue to the US Treasury. So it's another complexity, it's another wrinkle in this story at a time again when Chinese and US negotiators are meeting for that second day in Madrid.
Yeah, as I understand it, regulators had demanded at the time of the Mellanox acquisition that Nvidia supply locally, and it's not quite clear if Nvidia was able to supply enough or how this decision came to be made, but Nvidia has disclosed it in its filings. That's not stopping the stock from dropping pre-market, though. How are Nvidia's sales in China currently, do we know?
Well, we know that they've been building up a lot of inventory, at least $5 billion on some measurement, in terms of the H20 chip that they hope at some point to be able to supply and ship into the Chinese market. And we know that that'll be crucial in terms of, well, it's not central, they can survive. Nvidia will be perfectly fine without that, but it's not an insignificant revenue stream for them. So that inventory has been building up. They want to be able to ship that into the Chinese market. We know they've got consumers and companies that want to be buying that H20 for their AI development. But equally, we know that China and its regulators have told, and different arms of the administration there, of the government, have told companies in China that they should try and look at domestic alternatives to Nvidia's H20. So it's a market that is looking challenged for Nvidia right now. They're still selling some legacy chips, but in terms of getting H20 into that market, that just looks like there's another headwind now for Nvidia and its Chinese operations.
All right, Tom, thank you so much. That is Bloomberg Tech Europe anchor Tom McKenzie. Well, another tech firm in focus, and that's TikTok. U.S. Treasury Secretary Scott Bessent said the U.S. and China have nearly resolved the issue around the social media app. This during talks in Madrid with China's vice premier. Take a listen to President Trump speaking over the weekend.
They're negotiating TikTok right now. We may let it die, or we may, I don't know, it depends, up to China. It doesn't matter too much. I'd like to do it for the kids, they like it. I mean, selfishly speaking, I did very well on TikTok, and I got the youth vote.
For more on the talks generally now, I'm joined by Bloomberg's Jill Deesis. So, Jill, give us an update. What else do we know about these talks?
Well, as of this point, Vani, we know that these talks continue into today. So actually, the side, Bessent and Greer, are meeting again with Chinese officials today in Madrid as they continue to go over some of these issues. What we've heard so far, I mean, what you've laid out is that the U.S. side is saying that they're close on reaching some kind of a TikTok deal here. But I think the big question there is what exactly that looks like, particularly ahead of that Wednesday deadline by which that's sort of the U.S. sale deadline. There's also been some reports that may be delayed again. So we'll have to see how that ultimately develops. But I think really critically here, when it comes to TikTok, any kind of a sort of an agreement reached with China could really be something that paves the way for this really highly anticipated potential meeting between President Donald Trump and Chinese President Xi Jinping. That's something that could actually happen probably toward the end of October. That's when you've got some really big conferences that are happening in Asia Pacific that would sort of give a timeline for a potential Trump and Xi meeting, but it may be that we have to reach some kind of a deal on TikTok first. What we did hear from the U.S. side is that the Chinese side made a bit of an aggressive ask on that front. Not entirely sure, with a ton of details about what exactly that means, but I do think that it kind of shows that this is a bit of a sensitive issue, and it may be that when you're talking about some of those bigger geopolitical diplomacy relations, that it may come down to some kind of a deal on TikTok first.
And you have to wonder if these Nvidia headlines will change anything about the discussion too. Now, the Wall Street Journal is reporting that China is pushing for a Trump visit. What is the likelihood that that will happen, even after those meetings, in Korea in about 6 weeks' time? What would China want to achieve?
Yeah, Vani, well, I think that Tom just made a really good point talking about, this latest Nvidia ruling out of China. I mean, I do have to wonder whether or not that throws a wrench in any kind of relationship. I think what'll be really interesting is once the U.S. and China emerge from these talks in Madrid later today, whether there's any comment that Scott Bessent, for example, has to make on this Nvidia announcement out of China. I think that that's a really, really critical one to watch here. It is a really interesting Wall Street Journal report because that is one that kind of sets up this idea that, some sort of a resolution on TikTok could be what the U.S. is looking for as they try to lay the parameters for that potential Trump-Xi meeting. I wouldn't obviously write it off the table just yet. I think both sides have really been working to try to bring something, to the forefront by the end of the year. I mean, we've seen meetings with, a lot of other high-level officials, Marco Rubio, trying to, reach out to Chinese officials, really kind of pave the way for this visit later this year. So it is something that I do think, both of these sides, want to happen in some respects. But again, there's a lot of different issues in terms of these political tensions, and we've been talking about TikTok, but also trade as well. So lots to look out for there.
Absolutely, Jill. Thank you so much for the update. That is Jill Deesis there in Hong Kong. Well, from Madrid to Jerusalem, Israel's Prime Minister Benjamin Netanyahu celebrated the so-called durability of his country's relations with the U.S. during a visit by U.S. Secretary of State Marco Rubio. That visit coming days after an Israeli airstrike in Qatar drew criticism from Washington. Joining me is Bloomberg's Kasia Klimashinska, who leads our breaking news coverage out of Washington, D.C. So, Kasia, what signals did Marco Rubio send about U.S. relations with Israel?
Good morning. Thank you for having me. Indeed, Secretary of State Marco Rubio visited Israel. His trip, he departed on Saturday, and when he was talking to American reporters here in D.C. before departing, he said that the relationship with Israel is important and it will remain strong. But I think the U.S. has two tricky relationships to manage here. So on one hand, Secretary of State Marco Rubio went to Israel, but on the other hand, President Trump on Friday had a dinner with the Prime Minister of Qatar. And Marco Rubio was in some meetings with Qatari officials here in the U.S., in New York, on Friday as well. So clearly the U.S. sees the need to talk to both sides here after this attack, and President Trump had some critical words about specifically this one attack by Israel on Hamas leaders in Qatar. So we'll see how it plays out. Marco Rubio is in the region because he will now go to the UK and he will join President Trump for his second historic state visit in the UK later this week.
So a lot going on geopolitically, but there's also, of course, the FOMC meeting, and President Trump is not giving up on his push to fire Fed Governor Lisa Cook. We have a new court filing. Can you tell us what's in it?
Yes, so we really have like only hours left before the FOMC meets tomorrow to make the decision on interest rates on Wednesday. And the Trump administration has made it clear that they would prefer Lisa Cook is not part of this meeting, is not part of the deliberations. So at the bottom here is the accusation of a member of Trump administration that Lisa Cook committed mortgage fraud, and so President Trump is trying to fire her. But Cook, on the other hand, says that she didn't commit any crime, that if there are any errors in her mortgage applications, they are just of clerical nature, and that she should be able to attend the meeting tomorrow.
Kasia, thank you so much. That is Kasia Klimashinska there in Washington, D.C. Now to other top stories trending on the terminal this morning. French bonds are lagging peers after Fitch downgraded its credit score on Friday. The rating was cut to A+ from AA-, citing rising government debt, increased political polarization and doubts about the fiscal outlook. That takes France a notch lower than the UK and puts it on a par with Belgium. China's economic activity slowed more than expected in August. Retail sales grew 3.4% year-on-year, down from 3.7% the previous month. Industrial output and consumption had their worst month yet this year. The underperformance puts more pressure on Chinese negotiators holding trade talks with the US this week. Singapore's sovereign wealth fund, GIC, is said to be in talks to sell its stake in US landlord, Yes, to Brookfield Asset Management. According to sources, the entire portfolio could be valued at more than $10 billion. The deal could be one of the biggest exits for the sovereign wealth fund in years. Brookfield and GIC declined to comment. Coming up, Kamakshya Trivedi of Goldman Sachs. This is Bloomberg.
For sure, there's a chance they go 50, but they only go 50 if they feel they need to surprise the markets. Right now, they know the market's geared in at 25 basis points. It seems like a done deal. For sure, there will be a couple dissents who want to go 50. There may also be a couple who don't want to do anything, but expect 25 and expect no real surprises there.
JP Morgan's Bob Michel there is speaking with Bloomberg earlier as markets brace for the Fed's rate decision on Wednesday. Joining us now is Kamakshya Trivedi, head of global FX, rates and EM strategy research at Goldman Sachs. Thanks so much for joining, Kamakshya. So, as I understand it, Goldman now looking for 3 rate cuts this year and 2 early next year. What are the risks to that outlook?
Thank you for having me. Yeah, absolutely. I think, we have sequential cuts now in our forecast starting this week. I think there are risks on both sides of that. I think there are risks, certainly, given the softening that we have seen in the labor market over the last couple of months, the tick up in the unemployment rate. If that process accelerates somewhat, that you would have some people and the Fed, pushing towards, slightly larger cuts in the near term. But equally, as you get past, this softer period, what I think of as the kind of zone of maximum risk for the U.S. economy in the next couple of months, as you get into early next year, you could also see some risks, and certainly there will be some people on the Fed who might be, wanting, more limited or more gradual moves into next year. So I think there are risks on both sides. I think the forecast we have, 3 cuts this year, 2 more next year, feels pretty much, a balanced one here.
Well, you mentioned that there might be a couple of people that would dissent or at least not be completely happy with the decision. We also have, for the first time, potentially Stephen Myron, somebody from the administration, on the actual board. Might that, at the margin, shift things in one direction or another?
I don't really think so. I think that, for this meeting, I think 25 basis points seems like a pretty reasonable expectation. I think, the key here is not just the rate cut itself, but kind of what it is signifying. And I think it's signifying the fact that the economy has slowed. I think that the labor market in particular has slowed even more sharply. And I think that that is likely to coalesce the core and the majority of the committee around a 25 basis point cut. So, I think there are obviously going to be, some people on both sides of that, but I think the, core here is going to be for a 25 basis point cut.
On forward guidance, I love this. You talk about Fed Chair Powell nodding softly to an October cut. So are you saying that he won't sort of outright make it sound like, it's decided that there's going to be another cut between now and the end of the year?
I think that, he will try to keep his options on the table, as the Fed always does. I think they will be responsive to the data. But it is fair to say that, when you start to see this sort of pattern of softening, certainly in his commentary, in his question, answers to the questions, there is a likelihood that you start to get some move towards an indication that, this is not just, one and done, but this is perhaps the start of a more gradual sequential move. That's certainly our forecast, and that's part of why, we expect, for example, the dollar to continue to depreciate further after the period of consolidation that it's had over the summer. We expect, more rapid dollar depreciation, just because you start to see these cuts erode the high nominal carry that is in the dollar right now.
I love your phrase that we're entering a zone of maximum risk for the U.S. economy. What does that mean for yields in the near term? Do we see big movements?
Look, I think yields have already come down quite a bit as you've seen the labor market soften. So at this point, I think to see more downside in yields, to see, more dovish relief, you actually need to see the data get worse. But I think the key point is that, this is the period where we are seeing that softening in the labor market. This is the period where we are seeing the impact of, tariffs play through. As you get through this period, as you get into early next year, some of those impacts are going to be perhaps somewhat smaller as you get through into 2026. So I think that's the key point here, that I think we are seeing a period here where, as rates come down, yields will be relatively more balanced here, but I think the dollar is the one that's, I think, going to take it on the chin.
And Kamakshya, I have to ask you about China, because, there is the suggestion that China will have to make these talks work because its economy might be, slowing down just that little bit. What do you make of the slowdown that we saw in retail sales and the impact on the broader economy?
Yeah, I think, it's a second month, again, where you've seen kind of the domestic data that's weak. But really, I think the striking feature of the data set that from China over the past, month or, past week is that while the domestic side has continued to be soft, actually exports are still doing pretty well. I mean, the external side of the economy is doing, extremely well, especially when you take into account the fact that they have had a 30% tariff hit from the U.S. And so I think that combination still probably poses some upside risks to our China GDP forecast. And I think it poses upside risks to the CNY, especially given the negotiations going on with the US. So I think it's a mix here. It's not all one-sided or lower.
Kamakshya, thank you so much for joining. That is Kamakshya Trivedi of Goldman Sachs. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the New York Times, New York Governor Kathy Hochul endorses Zoran Mamdani for New York City Mayor. She made the endorsement in an essay in the paper's opinion section. The endorsement provides critical support ahead of the November election. Next up, on the FT, SEC Chair Paul Atkins scrapping the aggressive enforcement agenda pursued under former President Biden. Atkins has pledged to give businesses notices of technical violations before, quote, bashing down their door. Atkins is reshaping the commission as Republican regulators adopt a more business-friendly stance. And on the Wall Street Journal, appliance maker Whirlpool is telling the Trump administration its overseas competitors could be evading tariffs, undervaluing their imports. Whirlpool said import data show the value of declared customs of numerous appliances started to plummet in June. Coming up, talks between Washington and Beijing ongoing in Madrid. That's as Beijing rules against Nvidia. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. China hits Nvidia. Beijing rules that the chip giant violated anti-monopoly laws after a preliminary probe. That's as US-China talks extend into day 2 in Madrid. Trade, TikTok and defense on the agenda. And investors gear up for a big week of rate decisions with the Fed, BOE and the BOJ on deck. And it looks like we're starting Fed Week on a positive note, at least for the S&P and Russell 2000 futures, which are pointed higher. We were looking at positive Nasdaq 100 futures, but after that China decision came out, Nvidia turned lower pre-market, and that's dragging on the Nasdaq 100. Don't forget, we were setting up for a 9th day of gains for the Nasdaq 100. It was a week where we saw it up 1.9% last week, and the S&P was up 1.6% too. Let's look at yields, because Kamakshya Trivedi just telling us we're entering the zone of maximum risk for the US economy. Goldman Sachs expecting 3 rate cuts this year, though, and maybe a soft nod to one in October, but no more than that. Yields pretty much where we left them on Friday. Let's get to some individual stocks to watch now with Valerie Teitel. Valerie.
Good morning, Ivani. I want to start with Hims and Hers. It's sinking further in pre-market, down nearly 3.5%. This is on the back of the FDA chief writing an article over the weekend, essentially using the Hims and Hers Super Bowl ad as an example of what not to do with pharma ads, saying it did not disclose the appropriate side effects, and is using this case to argue for more stringent regulations when it comes to pharma ads. And this comes just a few days after Trump's executive order on declaring that these pharma companies have to declare even more side effects in their ads. Let's move over to the tech space. More regulatory scrutiny here, but this time coming from China. China launched not just one, but 2 probes into the chip sector over the weekend. One of them focused on anti-dumping measures when it comes to American-made IC chips. We're seeing Texas Instruments and Analog Devices both down nearly 2.5% on the back of this. This comes at a time when China is cracking down and even more on U.S. tech companies. We also heard about Nvidia, as you mentioned. That share also in the red, down over 2%, nearly 3% now in pre-market trade. This comes after a ruling from China that they have violated antitrust law when it comes to an acquisition they made a few years ago. But Vani, this is really China perhaps amping up the pressure on the U.S. as those trade negotiations continue in day 2 in Madrid.
Yes, the timing is very odd, right, Val? Thank you so much, Valerie Teitel there. Well, let's stay right with it. Bloomberg executive editor for Global Tech, Peter Elstrom, joins us now. So, Peter, this relates to the acquisition of Mellanox, as Valerie was saying. Can you explain what China has actually decided?
Yeah, this is a very good example of how these multinational corporations can get caught in the crossfire between Washington and Beijing. So Nvidia made this acquisition of Mellanox a few years ago, originally announced in 2020. And then they got approval from Beijing to go ahead with the acquisition in 2021, as long as they didn't discriminate against Chinese companies in their business. Now, we know what happened after that. The Biden administration and the Trump administration set in bans where Nvidia couldn't sell its chips, its highest-end AI chips, to Chinese companies, to customers. So by definition, it's discriminating against them. And now Beijing is coming back and saying, hey, you promised that you weren't going to discriminate against these companies. Now you are violating those antitrust laws. So this is just a preliminary ruling. We don't know exactly where it's going to go from here. Of course, there are also trade negotiations going on at the same time, but it's an indication that Nvidia is going to have some troubles here.
Yeah, and Nvidia had disclosed that it might be liable for penalties depending on this decision. It was clearly looking forward to a time when, there was a potentially negative decision for the company. But at the same time, what Mellanox does within the company is not a huge portion of what Nvidia does, right?
That's right. That's right. And Jensen Huang has been pushing quite hard to be able to sell chips into China. He wants to be able to tap into that Chinese customer base. The United States and China are really the two leaders in AI at this point. They're investing the most in AI services in particular. So Nvidia would like to be able to sell its entire range of products into China at the same time that it does into the United States. They've gotten somewhat of a hearing in Washington under Donald Trump's administration, where at first they wouldn't allow Nvidia to sell this H20 chip, and now they can. So there is some movement on that front, but it's all tied into very complex negotiations between politicians on both sides here.
Peter, thank you so much. That is Peter Elstrom there. Let's over to Washington, D.C. now. Bloomberg's Kasia Klimashinska is back with us. Kasia, this Nvidia headline out of China, this decision from the Chinese, what might it mean for ongoing U.S.-China talks in Madrid?
Good morning. Nvidia, TikTok, a lot is at stake for those talks between the U.S. and China in Madrid. The negotiations started yesterday. U.S. Treasury Secretary Scott Bessent traveled to Spain, and he spent about 6 hours talking to his Chinese counterpart, Vice Premier. And then the staff talked even longer into the evening. Then today the talks resumed, and Treasury Secretary Bessent sounded optimistic, but he also said that China has made a very aggressive ask without specifying what exactly this might be about. There is a lot of topics. Semiconductors, AI is one. TikTok operations here in the U.S. that should be divested this week is another one. But of course also tariffs and trade. And eventually, I think both sides want the leaders to meet. So President Trump and President Xi could meet as soon as next month, when they will both be in Asia for a summit in South Korea. So there is this speculation, expectation that maybe these talks in Madrid today are meant to kind of set the stage for the leaders meeting in Asia later this year.
Well, and then Secretary of State Marco Rubio is in Israel days after that surprise strike in Qatar. What is Rubio saying or even signaling about relations between the two countries?
Yes, so Secretary of State Marco Rubio and Secretary Bessent are both in the region because eventually they will join President Trump in the UK later this week. But Secretary Rubio met with Israeli Prime Minister Netanyahu yesterday. That's after Israel did this very controversial strike on Hamas leaders in Doha, and the U.S. now has two tricky relationships to manage with Israel on one hand, but also with Qatar on the other hand, both fairly important to the U.S. And so President Trump met with his Qatar counterparts in New York on Friday, and Secretary Rubio was part of those meetings as well. And as you mentioned, then on Sunday he was in Israel.
Kasia, on the domestic front, President Trump isn't giving up on his push to fire Fed Governor Lisa Cook. What is the latest?
This perhaps will be the biggest story this week, as the Fed is meeting tomorrow and on Wednesday to make a decision on interest rates. And the Trump administration doesn't want Lisa Cook to be there. The Trump administration believes that she committed mortgage fraud. One of the members of the administration presented documents claiming that she described two different properties as her primary residence, and so maybe that led to better terms for her mortgage loans. Lisa Cook, on the other hand, says that she didn't mean to commit any crime, that if there are any errors, they were just of clerical nature. And anyway, all of this happened before she joined the Fed. She didn't have enough time to defend herself. And so she aims to join the meeting tomorrow and be part of the voting committee on Wednesday. And so President Trump reached out to the courts once again, asking for a ruling as early as today.
Yeah, that filing went in yesterday. It's going to be a fascinating week. Kasia, thank you so much. Kasia Klimashinska there in Washington, D.C. And over to Germany now. Tesla's factory near Berlin intends to produce more EVs than previously planned. The plant's merger and manager citing very good sales figures in remarks to a German news agency. For more, Bloomberg's Craig Trudell, who leads our global autos coverage, joins me. Craig, the comments were a little strange. I didn't think that sales had been all that fantastic in Europe recently, never mind Germany. Do they match up with the data?
Yeah, when you look at these comments against the data, it really they are a total head scratcher, Vani. You look at across Europe, there's a handful of markets where Tesla is doing okay, or maybe growing a little bit, and I would point to UK and Norway as being the two markets where we're seeing that. But everywhere else across Europe, you're seeing really substantial declines, and it's not been a case of, in the last few months, we've seen a turnaround. So this is, I would say the second time this year that we've had, some major person at Tesla indicate that things are turning. Last time it was Elon Musk at the Qatar Economic Forum. He told our colleague Michelle Hussein that things had recovered. They in fact had not, looking at the data that followed. And while there are countries outside of Europe that this plant serves, the vast majority of the vehicles that are made at this factory serve Europe. So it may just be the case that the company had pretty downbeat production plans for the third and fourth quarter, that they've modestly increased what they plan, but it's hard to tell just looking at these somewhat vague and contradictory comments out of Tesla.
It is good to question them at the very least. Well, staying on electric vehicles, BYD is actually under some pressure. It had a $45 billion stock sell-off. What's behind that downturn?
This is a pretty straightforward story where we've seen, just over the last few weeks, real serious efforts on the part of Beijing to really crack down on really aggressive sales practices by the EV industry in China. And perhaps, no manufacturer has been as aggressive as BYD in terms of heavily discounting its product, competing on price as opposed to technology and sort of allowing for sort of natural demand to dictate how many vehicles it's selling. The company, I think, would of course push back on its role in things, and yet when you look at the degree of discounting going on in that market, the reluctance on the part of a lot of international car makers to sort of play along with this game, and predictions by major executives across the industry that this can't go on forever, that eventually some car makers are going to sort of fall by the wayside if this keeps up. And you even hear that from BYD's executives, that they make these sort of grim predictions about a real serious winnowing out of this industry as long as this keeps up.
All right, Craig, thank you so much for the update. That is Craig Trudell there. Now to other top stories trending on the terminal this morning. French bonds are lagging peers after Fitch downgraded its credit score on Friday. The rating was cut to A+ from AA-, citing rising government debt, increased political polarization and doubts about the fiscal outlook. That takes France a notch lower than the UK, puts it on a par with Belgium. China's economic activity slowed more than expected in August. Retail sales grew 3.4%, but that was down from 3.7% the previous month. Industrial output and consumption had their worst month yet this year. The underperformance puts more pressure on Chinese negotiators holding trade talks with the US this week. And Singapore's sovereign wealth fund, GIC, is said to be in talks to sell its stake in US landlord Yes to Brookfield Asset Management. According to sources, the entire portfolio could be valued at more than $10 billion. The deal could be one of the biggest exits for the sovereign wealth fund in years. Brookfield and GIC declined to comment. Coming up, the war between Russia and Ukraine certainly not holding back the Polish economy. More next. This is Bloomberg.
I don't think that was a mistake. I think Putin is testing the resolve of NATO. He wants to see how NATO reacts, how Poland reacts. The good news is Poland had a great response. They shot him down. But it shows you how aggressive Putin is getting in the region.
Republican Congressman Michael McCall of Texas speaking to ABC on Russian drones entering Polish airspace last week. Well, despite having much to lose during the war between Russia and Ukraine, Poland is actually the fastest growing economy in the EU. Joining us now is Matthew Winkler, Bloomberg News Editor-in-Chief Emeritus. And Matt, you have a story out today that's just fascinating, in which you call Poland literally a juggernaut among the 26 nations of the EU, the fastest growing economy. Give us some statistics before we ask you how it got there.
Well, it's great to be with you. And you're right. Data compiled by Bloomberg shows that Poland, for the first time since it joined the European Union in 2004, is the continent's growth leader with a gross domestic product. It's about $915 billion equivalent. And it's projected to expand 3.3% in 26, another 3.2% in 2027. And these are economist forecasts compiled by Bloomberg. EU, European Union GDP, by contrast, will show gains of maybe 1.4%, 1.7% in the same period. Russia, by the way, is way behind, 1.4 and 1.5%.
Yes, how did it get there? How has the war impacted Poland's economy?
Well, you know, the funny thing about the truth is you never have to change your story. Poland's ascendance is the validation of the single market. And since it joined the EU, the country's resilience after so many partitions, historically, occupations, it's really a data-driven rebuke to the anti-EU groups that paved the way for Brexit in 2016. And in fact, all those people who may have left Poland to work in European Union countries, Britain, for example, France, for example, derided as the Polish plumber, those people actually have returned to Poland since, of all things, Brexit. And they've made a huge contribution to the GDP, but they've also brought back very skilled labor. And in various professions, whether it's healthcare, for example, or any number of the professions that are most important to the economy, the Polish employee worker is part of the juggernaut. And you can see that actually if you compare Poland's GDP expansion compared to the UK. Since 2016, which was when that referendum occurred, Poland's GDP has expanded leaps and bounds, 100% since then, whereas the UK, unfortunately, is way below 50%. So you could say if Brexit marks the turning point when the UK transitioned to a European laggard from a leader, it coincides with the reverse brain drain in terms of the total number of Poles living abroad, which actually declined to 1.5 million in 23, but that was mostly because of largest, if you like, aging population and fewer women of reproductive age. But nevertheless, even with that happening, Poland has economically become the leader of Europe.
Well, and
no European economy comes close to that, replicating this. It's a 125% increase in household consumption, for example.
Wow. And you always get that with the reverse brain drain, right? Because it's a virtuous cycle. So then growth continues and it just carries on like that. I want to mention that the zloty is the best performing currency among the 23 most traded in emerging markets. And also the stock market in Poland is up 61% this year alone, as you write, making it the 5th best performer in the world. How risky is an investment in Poland considered to be right now?
Relative to anywhere else, actually pretty good. You know, the relative value actually of Poland is, if you look at the stock market, it's, you know, and we're tracking large and mid cap prices. It's up 49% this year in dollar terms, and it's number 6. as you referenced, and that's among 46 countries. But at the same time, if you look at Polish banks, which are really the biggest part of the robust performance, they're still a bargain for investors. They're only paying 1.7 times for their net assets compared to 4.7 times for the benchmark, according to data compiled by Bloomberg. So the answer to your question is actually Poland still is relatively cheap at this point.
I don't want to call it a Slavic tiger necessarily because we're not seeing other Slavic economies winning quite clearly. But are other economies benefiting at least from Poland's growth?
Sure, to the extent that, Poland engaging with other countries is certainly helping all of its neighbors and all of its trading partners. So it is benefiting the EU in that sense. And as I said earlier, this is a validation of why the common market makes so much sense and why it's been a disaster for the UK leaving, because the UK has just given up a lot of economic growth that it otherwise would have had being part of the EU. So, yeah, the answer to your question is everybody benefits to the extent that Poland is doing well.
Well, it's a fascinating read, and our thanks to you. That is Bloomberg Editor-in-Chief Emeritus Matt Winkler. Coming up, 3 major central bank decisions in the span of 3 days. We'll get you set up for your week ahead. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at the week ahead in central banking first, because they obviously have 3 central bank decisions today. US retail sales coming up on Tuesday. Then President Trump lands in the UK for a 2-day state visit on Wednesday. And it's a marathon, as I was saying, of central bank decisions. We have the Fed Wednesday, the BOE Thursday, and the Bank of Japan on Friday. Let's take a look at some movers now pre-market. Nvidia, of course, the big one. China's preliminary probe is finding that the chipmaker violated antitrust laws. That not only has Nvidia lower pre-market, but the whole Nasdaq 100. Texas Instruments as well, a little bit of a halo effect there. Beijing says it's also launching an anti-dumping investigation targeting a type of semiconductor made by US companies, including Texas Instruments. And Tesla, it's higher by 1.3%. A plant chief in Germany says it's boosting its production plans for the region. Make of that what you will. Let's take a look at the macro environment now, because we do have a setup that looks like it's positive, at least for the Russell 2000 and S&P futures. Don't forget the S&P was up 1.6% last week. Nasdaq 100 futures were higher, but after that Nvidia news, they turned lower, though fractionally. We'll see what happens throughout the day. Nvidia had disclosed that this would be happening. Let's flip up the boards and have a look at what else is going on, because before that central bank decision Wednesday, lots of questions swirling, but we do still have the 2-year at 3.55 and the 30-year below 4.70 by a good amount. And let's take a quick look at the dollar as well, and oil. Oil putting on another 0.5% today, a little bit of support there, even as supply concerns continue. Gold is fractionally lower, but many analysts saying that there is room for it to move higher. And sterling and the euro are stronger today, and that has the dollar index a little weaker. Surveillance continues the conversation. This is Bloomberg.